Good morning, children. So, as you know, we have already completed the chapter Bills of Exchange conceptually, and all the entries we have already discussed. Now, this is the assignment video. This is the video in which there are a number of questions based on the chapter Bills of Exchange, and the topics taught to you in this chapter is given to you, and you are required to solve these questions in your copies. So as you can see, this is the assignment. You have to answer the following questions in your register. Number 1, you have to define a bill of exchange. If you remember, we have already done the definition of bill of exchange in the previous part video as per Negotiable Instrument Act, and you can write the same definition for bills of exchange, that a bill of exchange is an instrument. It is an unconditional order drawn upon a specified person to pay a certain sum of money and on the maturity date. Question number 2, state any 2 advantages of bills of exchange. So in this case, what you need to do is you have to give any 2 advantages of bills of exchange. Number 1, you can write it can be served as an evidence. Number 2, another advantage can be no reminders needs to be sent to the drawee. Question number 3, you have to briefly explain the parties involved in a bill of exchange. So as we have already discussed, there are 3 parties in the bill of exchange. Number 1 is the drawer, who basically makes the bill of exchange. He puts his sign. Second party is the drawee, on whom the bill is drawn, who is liable to pay the bill amount. And number 3 is payee. Payee is the person who receives the payment, and basically payee is the holder of the bill. Question number 4, you have to define promissory note. The definition of this also we have done as per the Negotiable Instrument Act. What is a promissory note? Promissory note is an instrument. It is a promise to pay a certain sum of money on the maturity period mentioned therein without any days of grace by the maker of the promissory note. Question number 5, you have to briefly explain the parties involved in a promissory note. In a promissory note, there are only 2 parties. One is the maker, who promises to pay a certain sum of money to some other person, and another party is the payee. Payee is the person who receives the payment. Then question number 6, very important question. You have to state any 2 differences between a bill of exchange and a promissory note. So one difference can be, in case of bill of exchange, 3 days of grace are allowed. In promissory note, no days of grace are allowed, not even a single day. Another difference can be, bill of exchange has 3 parties, drawer, drawee and payee. Promissory note has 2 parties, maker and payee. Then another difference can be, bill of exchange is honored or is paid by the acceptor of the bill, whereas promissory note is paid by the maker of the bill. Then another difference we have discussed, bill of exchange requires the acceptance of the drawee, whereas promissory note is a promise and therefore it doesn't require any acceptance. So you can write any 2 points, whichever you feel is easy. Then question number 7, you have to write a short note on number 1, bill at sight. So what we have discussed for this, that if any bill is bearing the word at sight, it means that it is payable on presentation. As soon as the bill is presented for payment, the drawee needs to make the payment, and this is generally done when no date of maturity is mentioned in the bill of exchange, and in this case no days of grace are allowed. Then number B, bill after date. Any bill which is having the word or bearing the word after date, it needs to be honored on the date of maturity along with the 3 days of grace, and the maturity period will be calculated right from the making of the bill, right from the date which is mentioned as the making. If the bill is made on 1st January and if it is accepted on 15th January, then the duration will be counted from 1st January and not 15th January. Whereas just the opposite for this is bill after sight. If any bill is there where after sight word is mentioned, that means here the duration, again this bill will be honored on the maturity period calculated after adding 3 days of grace, but here the duration, the maturity period will start, the calculation will start right from the date of acceptance and not from the date of drawn. Just in the previous example, if the bill is made on 1st January but is accepted on 15th January, then in case of bill after sight, the days will be counted from 15th January and not from 1st January. Question number 8, you have to fill in the blanks. If the due date, including the days of grace, falls on Sunday or a public or gazetted holiday, the due date will be supposed to be 1 day earlier. Number B, if the due date including the days of grace has been declared as an emergency holiday, the due date will be supposed to be 1 day later. Then question number 9, you have to state the meaning of bills receivable and bills payable. What is a bills receivable? Bills receivable is a bill against which a party receives the payment. It is an asset for the institution or for the respective person, and therefore it carries a debit balance. Whereas what is bills payable? Bills payable is a bill against which the payment needs to be made. It is a liability and therefore carries a credit balance. Then question number 10, you have to state any two uses of bills receivable. So what are the uses of bills receivable, children? Simply, it can be retained till maturity, it can be discounted from the bank, it can be endorsed, it can be sent to the bank for collection, etc. Question number 11, you have to give the journal entries related to bills of exchange in the books of various parties in each of the following cases. That means you have to give the journal entries which we have already discussed. A, when the bill is retained till maturity. B, when the bill is discounted from the bank. C, when the bill is endorsed. D, when the bill is sent to the bank for collection. And fifth, retiring a bill under rebate. So all this we have already discussed. Just for the revision's sake, these are the entries which you need to pass for case number 1, when the bill is retained by the drawer in his own possession till the date of maturity. When you are passing the entries for this question, children, don't forget to pass the entries in the books of each party's drawer, drawee, by default in all the cases, and also endorsee and any other third party if present. Then case number 2, these entries will be passed when the bill is discounted with the bank in the books of drawer and in the books of drawee. You need not pass the entries in the books of bank. Then when the bill is endorsed, you need to pass the entry in the books of the drawer, the drawee and the endorsee. Then case number 4, when the bill is sent to the bank for collection, these are the entries which you need to pass. Then these entries will be passed when the bill is retired or is repaid under rebate. So all these are the entries which you will be posting, which you will be writing for this question. Moving ahead, another question, children, you have to give the journal entries related to dishonor of bills of exchange. There we pass the entries for recording bill of exchange. Here we are passing the entries for dishonor in the books of various parties in each of the following cases. Case 1, when the bill is retained till maturity and is dishonored. Then when the bill is discounted from the bank and is dishonored. Then when the bill endorsed to a third party is dishonored. And question 13, you have to give the journal entries to be passed if the acceptor of the bill becomes insolvent. So for these questions also we have discussed the entries which you need to write. This is for dishonor when the bill is retained till maturity in the books of drawer and in the books of drawee, along with the noting charges, very important topic. Then these are the entries for dishonor which you need to pass when the bill is discounted from the bank and is dishonored, taking into account the noting charges. These are the entries which you will be passing when the bill is endorsed to a third party and is dishonored, and you will be passing the entry in the books of drawer, drawee and endorsee, taking into account noting charges, children. And this can be written as the answer to the last question, children. The entries for recording the insolvency of the acceptor. That means when the acceptor or the drawee becomes insolvent, these will be the entries which will be passed in the books of the drawer and drawee, taking into account the amount lost as or which could not be recovered as bad debt. So all these questions, children, you need to answer in your copies, in your register you need to do, and this will be counted for your internal assessment. Till then, thank you, children. Take care.